Hello guys, this is ICT with a Pro Traders tip of the week. Alright, we're going to cover a concept briefly. I'm not going to go into great detail with it because it's simply going to be covered next month in the ICT 25 Days of Christmas. Nice plug, I know. Alright, one of the questions that come up a lot by way of email and on the posts and in our thread on Baby Pips, what every new and or aspiring forex trader still wants to know. If you if you've been looking at the Trader's Trinity and you've encountered an opportunity where the Trinity itself has been compromised, either trading above or below the lower boundary, this would be the buy area or oversold. This would be the sell area or overbought. Okay. What happens when price is outside of the Trinity matrix? Okay, as we have here. Okay. Well, as soon as price breaks down through this, okay, and it's trading in really far oversold conditions, the neophyte trader and most newbies or undisciplined traders would simply say, well, it's time to buy because we're really oversold. No, to me as a professional trader, my insight is this is telling you something, and it's telling you that the market has broke down and it wants to take out all these lows in here. All right, and to get down that point, it's going to have to go low. So it's telling you basically don't be looking to buy. It's telling you there's a strong momentum on the lower level downside objectives. In other words, look for shorts. All right. Now here's what I wanted to show you. This is real brief. I'm not going to go into great detail with it, but this is how you use the matrix. You have the upper and lowest regions here. Okay. These two levels here are very, very crucial in a lot of my analysis, simply because this gives you a previous week's high and low. This central level in here also is very crucial because it gives you equilibrium. If price is really moving far away from equilibrium and it's broken outside of the previous week's range, chances are it's looking for a significant down move. Okay, and especially if it's unable to get back and retest the previous week's low. Okay, so now what do you do with the matrix? How do you do any analysis with it, since it's now in most people's eyes broken? It can't be utilized for the week now. What you want you to do is take your fib, drop it on the lowest boundary, pull it up to the highest boundary, okay, and drop it. So what you're doing is you're getting a swing projection from the lowest to the highest. All right, and you're going to get two calculations, and I'm going to explain that in a second. I know I didn't want to go this far with it, but it's going to have to do for this one because it's on the chart. I got to look at it that way, and it'll make sense in a moment. All right, you see this level down here? Watch what happens. Price trades down to it. All right, and you're going to like this. This concept is extremely precise. So you guys that like getting your socks knocked off with really cool price analysis concepts, this is one that you're not going to, you're not going to see this on, the internet. You're not going to see this in books and mentors teaching it in their webinars and seminars and all this other stuff, because simply it's proprietary. I came up with this simply on my own. It was based on determining, what levels consistently provide opportunities to trade off of. And I blended it with banking levels and institutional levels and support and resistance. And, this is basically, it's mine. I'm just going to claim it. I'm going to say what it is. And it's, nobody can claim it for themselves. It's mine. I'm telling you, I got 2,500 books and I've never seen it anywhere. And I'm telling you, this is going to be so cool when you see it happen on your chart and you do it yourself. All right. So we have a matrix here that's broken outside of here. All right, we start a new week here, but look what we've determined where price is going from here. During this week, when price breaks out of it, using this matrix, using the swing projection, we're looking for a low down here. Incidentally, as happenstance would have it, it would be a low penetrated over here. So they're gunning these stops. Watch this reaction right here. Think you can make money off of that? And it was determined by this level here. Okay. Let me drop a pivot on here so we can contrast the difference. Okay. Didn't get to that pivot. And if we change to New York time, notice there's an absence of any kind of pivot down here. So why did price react? That's the reason why it reacted, using the Trinity's projection from the previous week. Okay. Now it gets cooler. Watch. Take these pivots off. Alright, so now price is now again outside of this Trinity's range here when we broke down back through it again. So what you want to do is you want to take the low end, extreme, pull it up to the highest, drop it, there you go. Think there's any worth to that? Where's it go? Right back to fair value, which is previous week's 162 extension. Alright, now that's the event that takes place when price is beyond the oversold region. Okay, and let's get to more timely examples. Alright, price is traded above Trinity's overbought region in here. Okay, here's the oversold fair value, no man land in here. Doesn't mean you can't trade here, but let's just leave this area alone. We're not going to talk about that here because I'd be in here ranting for 45 minutes just with this section in here. I do trade in here, but you just have to be nimble and also have to look at the higher time frame. So I'll just leave it there, just for simple fact that I mentioned it and I wish I wouldn't have now. But the overbought region, when we trade above and outside of the Trinity, okay, what you want to do is again take the lowest region, the highest region. Now again, we're above it, so you want to put your fib on the high, drop it down to the low of the matrix on the trader's Trinity. So you're using the previous week's high and low. Now here's the 162 extension. All right, you see that? But more importantly, the level I really want you to be paying attention to is that one. Okay. Now, when you're watching the price action here, you know, if I'm on the chat room and I'm telling you, you know, the fiber's going to 170, okay, I'm sorry, it's going to 140, 170, and it's trading here. People are like, what? How you doing? How do you get that? Well, this is how I did it. And if you take the level and you drop it on here, okay, where to go? Right here. Now, what about this high right in here? I mean, we didn't nail it here, right? But watch. If you have the market flow and everything in its direction, it's broke out here. It's telling you it's trying to go higher. Okay? Watch what you can do with this. I'm going to take this fib, borrow it, drag it over to the high of this Trinity, and over to this low. Okay, so we're using the high and low on this matrix, on this trader's Trinity, and there you go. Institutional level 142.20, bingo. Okay, and this is how again, there's a lot more to this. I'm just giving you a real quick, kind of like to get you salivating. I know a lot of guys don't like that, but you know, I'm giving you something that's useful, so I hope you appreciate that. You can take the matrix here and plot it on here, and you can see how price has respected these fib levels even in the new week. And we can plot here to here. It should price had gone above here, we would have been using this level and would have been looking for 45.30. I know it sounds crazy, but I'm just showing you how you would walk out each week and use the levels. So since we broke down here, a more useful insight that we can glean from it would be to see we have the high range, low range, it broken outside of the Trader's Trinity. Okay, you got 162 down here. Where's it going? Well, let's put our little level here. If price gets any kind of momentum going lower, there you go. See that low? There's a lot of money sitting underneath that. And this would essentially take that right out. Alright, so there's your long-term, far out projection from Inner Circle Trader. So if you're looking for price levels on the higher time frame and how to use the tools I've shared so far, this is one of the better ones. And we would have to obviously break down below the lowest region of this week's Trinity, but you know, it's still early in the week. So guys, we were in the chat room last night, and I just kind of like tossed out where I thought fiber and was going to go. So let's pull it off. Okay, and here's Sunday's gap. I shorted in here, right up in here, and took some profits right around in this region here. And I was saying that we had a really good opportunity to see 37.80 by 9 o'clock New York time, and we did see that. And ultimately the low here I was hinting at being blown out. If you look at the price level, once you delineate it, notice how they got all the stops out here, swept it, pulled right back up into the range, and whipped below, whipped above. So it's basically, the market's basically looking for stops. And if you see how prices traded down, okay, we had optimal trade entry in here. We've since went lower. What had me nice and confident really with the short with Whiplash on Sunday was the fact that we were gapping into optimal trade entry after a nice swing down. They gapped it back up in here. Everybody got real excited about quote-unquote positive news, whatever that might be for the Eurozone. And yeah, if everybody's talking about it, you want to fade the news. Buy the rumor, sell the fact. It still works today. All right. We have several failures that go higher. Okay, we just simply can't get any legs up. So I suspect that we will now look for swings below this low in here, and you can take your swing projection and start taking levels and projecting them where price may, should this low be taken out, we could look for 36.50 institutional level, and the 136 figure is definitely within striking distance. Now obviously once price, if it does get above the high made on Sunday, obviously we have to respect that and see what price would be giving us once we get to that level. But in here, I'm certainly not bullish. I'm looking for lower prices, and in fact I am still net short in a position, so I will be hopefully seeing lower prices in here. It's a Z day basically. If you guys are scratching your head wondering what's going on, you just basically want to take the high made on Sunday. It's a safe bet to the low made, and you can see how we have essentially worked a 50% or equilibrium point. Okay, we moved down below it, above it, below it, above it, below it, and we're just basically hugging it right now. I think that we'll try to swing lower, and if at the very least, if we can take out this low here, I think that'll bring in some sellers and try to get short. The daily chart really doesn't look wildly bullish to me because we have been moving precipitously lower. If you're a chart pattern trader, I mean, that is a pretty obvious bear flag in there. And if you use your projection on that, it really would indicate that we have a high probability, should this be in fact a bear flag, a retest of this low in here. Okay, so that's more or less what I'm looking at for price and how I use Trader Trinity when we do trade outside the boundaries of the extreme overbought and oversold. And with that, guys, I wish you good luck and good trading. Waiting for